I'll start by describing a little bit on the slide of the numbers. Mentioned that $15 million of revenue is the best third quarter ever, and one of the best quarters ever we had. It's 22% over last year, same period. Gross margin is 48%, which is up from 44%, and adjusted gross margin, which is without non-cash expenses, is 51%, up from 48%. This is, gentlemen and ladies, extremely important because the business model of all companies in our industry suffer from gross margins and therefore from lack of profits. When we get to 55% gross margins, we start to show profits, and substantial. And this is very, very exciting. And no less exciting is the net cash burn. Gentlemen and ladies, we turned around Nano Dimension from $16 million burning per quarter last year to $3 million net cash burn, and we're close to break even in cash burn. And this is only Nano without the two acquisitions. Smaller Nano, which we cut expenses by reducing headcount dramatically and still not harming the revenue and the growth, which comes to show you that the direction to profitability, which we are committed to, is well ahead. If you would want to have a snapshot in slide number 7, you will see what we did with Nano over the years that you gave, since you gave us the cash about 3.5 years ago, and we were a steward of the cash and promised you we are not going to spend it until we get into large acquisitions. So we did spend it on smaller acquisitions, and for about 2.5 years, and as a result of that, got attacked by a kind of activists or whatever you call them, shareholders that were practically interested in the cash that the company has. But we got to the point where we did use the large cash that we raised from you, and we used it for the good reason at the right prices. And we acquired 2 large companies, and if you look how we moved from left side of the slide to the right side of the slide, from one technology and one type of machine in additive manufacturing electronics into technologies with dozens of types of machines, more than 1,000 patents. We have the largest amount of patents, which is spread all over the industry, and that by itself in the future may create a profit center for us. We have technologies nowadays that include inkjet, binder jet, DLP, FDM, ceramic, composites, electronics, metal casting, polymer, and micropolymer. We have only one technology that exists in this industry that we're still in look for, and we have plans how to reach it. And that's a technology that has to deal with another technology for metals. We do believe very strongly in the metal business. The next slide, slide number 8, shows you these 2 large acquisitions, why we waited for so long. Look, ladies and gentlemen, since September 21, when we had the money and raised it, those companies that we now acquired were traded at between 15 to 35 times their revenue. 15 to 35 times revenue. And in this whole period, September 21 to May 22 to January 23, as the outliers from the different countries here tried to attack us for not spending the cash and for trying to distribute the cash to themselves, we waited. We waited as those large transactions started to lose value and lost it steadily over 2 years until we got to the end of 24, and we bought them both at less than average one-time multiple, one-time sales multiple. And we believe we paid the right price, and we bought them at the right time, because if they were to proceed forward, they would be in trouble, which we believe they wouldn't be able to withstand by staying standalone, independent. Now that we brought them together, all 3 of us together, are creating an industry leader, which you see in the next slide, number 9. On the left, you see how we build ourselves. The $56 million is the old Nano, which is built from 7 small acquisitions and 29% organic growth. I'm emphasizing the 56 from 22 to 23 grew 29%, not from acquisitions, from organic growth. And if you read different numbers in the material that this foreign company from Canada, I think, is publishing, it's all coming from somewhere that is not the industry, it's not the numbers of the company. So we grew organically. Then we added, and we're adding $190 million. All numbers here are based on 2023 pro forma numbers. That's Desktop Metal. And we're adding $94 million of Markforged. So together to create a new $340 million business based on 2023. And I'm telling you right now, we're not going to emphasize the high revenue. We may even reduce the revenue on account of being profitable. If need be, the $340 million will be reduced to numbers where the gross margins will be higher and the profits will come and appear, and at multiples of profits, we'll get the share up. In the right side of the slide, you see kind of analysis of 6 companies in the industry, public. On the left, the small Voxeljet, Velo, Prodways, which are smaller companies that were public. 2 of them, Voxeljet by now is not public anymore. It's squeezed down to off NASDAQ. Velo is on its way from $77 million of revenue per year to $3 million revenue per year. And Prodways is going down from closer to 100 to less than what it shows here, and are traded, by the way, in the Paris Stock Exchange. In parallel, you see the 3 biggest companies in the industry on the right side: Stratasys, 3D System, and yes, us with $340 million. But look at the difference in the amount of cash that each one of us has. We will be $340 million with $470 million of cash on the balance sheet, and the other 2, you can see the numbers. That means we have the dry powder to turn the 340 into a profitable and growing 340, not into just revenue growing by acquisition or otherwise, but no profits. The focus of this company moving forward from into 25 and forward is going to be gross margin and profits in the bottom line. And the cash that we have will be used as less as possible to cover losses and as more as possible to create profit, to create and generate even more profits. Those Murchison are the guys that during the 2 years that we were stewards of the cash, our share was traded lower. I agree, like the rest of the industry. So they bought for $2.50 a share, their shares, and they think that now they'll distribute the cash and make money. But most of your shareholders, including myself, we bought for more than $2.50 a share. So the only way for us to make money is to grow the company and multiple the value of the share to numbers that will have a return on what our cost. And the cost of a lot of our retail shareholders, 150,000 in numbers, is not 2.5 like Murchison. It's 4, like mine, for instance, 4.5, 5, 6. We need to create higher value than that, and we shall. The first question, reaction of customers is, and you're asking me, as I said earlier, in the right time, because I'm in the Frankfurt Formnext show, so I'm meeting a lot of customers, is extremely excited. I'm speaking not only of customers of Nano, existing customers that are happy to have an ability to have an expanded product line, but I'm now talking to customers of Markforged and Desktop Metal, which are coming to me to discuss the future of their product lines. And excitement is all over. You feel the vibration in our booth. And I know it when I'm saying what I'm telling you now because I've been in all the trade shows of the last, or most of the trade shows of the last 3 years. This is the most exciting one. Secondly, regulatory. Yes, we're finishing the regulatory work. We pretty much finished with Hart-Scott-Rodino. We finished with the vote, the proxy and the vote of Desktop Metal, which all voted for the deal. We are finishing the work with CFIUS and expect the transaction with Desktop Metal to close before the end of the year. Expect and hope, and so much as Mark Forge, we are a bit behind on that because we started later the transaction. But KBR, Hart-Scott-Rodino, HSR is pretty much done. CFIUS is a parallel process to what we went through, so we hope it's going to be much shorter. And the shareholder vote of Mark Forge is supposed to occur in the beginning of December. Hence, we're still hoping to close the deal with them in the first quarter of 2025. And so much as profitability, I expect that the first few quarters you will see profitability and especially cash flow that's improving. The worst cash flow obviously will be in the quarter when we will merge the three companies together, because Nano itself, we are already in a very, very good cash flow position, but the other two companies are still burning cash. So the first quarter will be combined cash burn, but the minute we get control over the companies, and we are already in plan and discussion with their management, we intend to start to cut expenses dramatically. So when you get to the beginning of 2026, we hope to either show profitability or show cash flow positive, or both.